Hello and welcome again at Stocks Advisor. Today we will talk about Universal Security Instruments Incorporated, traded at Amex, ticker name UUU. And as always, first let's look in the chart in general to understand what's happening, what's going on, and next we will talk about how to buy through and still how to make profit on this position. So first of all, of course, we can clearly see that the company was growing, really in a nice growing mode from mid-April, from previous year. And actually, the final growth started from mid of September. You can see the price was really growing really nicely, also making it a really significant growth, even with those enormous spikes having taking place actually by end of October, by end of December, and also in February we see. But now what's happening? We are in the decline, and if you look at major indicators like moving averages 20, 50, and 200, you can really see that we're in decline. And the reason for that is that we're switching from the stable growth regime to more correction regime. And what does it mean? Just to give you a little bit small indicational note. So the stable growth regime you can call when you have a pattern like this. So your price is on top and bouncing at moving average 20, then you have your moving average 20, 50, and 200. So until you have this pattern, especially for mid and long-term traders, you are very safe because this is the stable growth regime. The price just bounces and goes up, and that's exactly what we had here. Of course, sometimes price could go a little bit lower than moving average 20, it's just bouncing on that. But whenever this regime switches to another one, so once you have this pattern, at least once, so you're moving average 20, then 50, and then price is below for a short period of time, and then moving average 200. So once this is taking place, it means that you are about to start a major correction. You can still have one final or couple of rebounces, not higher than the previous heights, just as a kind of aftermath, but this is the correction call, and that's exactly what happened here. If you look now, so we can see that starting from actually October, we were in this first growth regime, the stable growth. And now we see that from March, we had a situation when the price pierced lower than moving average 50, and now we were in this consolidating upwards move. So it was actually just let's say a wait before next decline, because this was the first declining channel. Then, as always, we had some temporarily recovery taking place. And now what we see, let's now magnify back so we can look finally at the current situation. Now what we see, it's actually accelerating decline. And with this accelerating decline, you can see the new channel is formed, and it is so fast that it's actually even hard to say how it will go. Will it go even lower or not? So you can't even classically draw a channel here, but it is declining. You can still say, well, this candle is smaller than previous ones, so it might be effect of deceleration, but this could be also fake. There still could be one rebound, but in general, what you see here is really formation of a very strong decline pattern. And actually, if you look of trend lines here, you can see that the trend line, this one is forming kind of a strong resist. So let's draw it with red and give it a name. So this would be the R1 resist level, which will be very strong. So even if we have a temporary bounce for these days, we will go lower. And the reason for this is also that here we have a very strong void. Again, a little bit demagnified to draw it for you. And this void works as a very, very strong price attractor, because you can see here, this is the level. So this void formed here works as a very strong price attractor, even lower. So overall, this is the area, because we had a very strong rebound there of the price, and you can see, so now I magnify back, so you can see this void is actually really attracts the price, and it works as an attractor but also as a support, because moving average 200 is here. By that moment it will reach higher. So this channel will work as a very, very strong attractor for the price, and therefore it will be advised only to buy through it once the price is there. Again, I want to repeat, it still might take another rebound, but most probably due to technical analysis, we're going to decline there. So let's rewrite those now with these support lines. So you can clearly see this is the first and this is the second. So this is the channel, this is the word that attracts the price. And whenever it is activated, it is advised to buy here. So for the moment, it's just wait signal for the position, but then we can buy, and this will be between 350 and 445. So let's write it here as a call out for us. So this will be 350 and 445. So first channel to buy in, again, very strong attractor word, because there was a jump grow at the beginning, by end of the year, almost by the beginning of this year, and then the price increased strongly, but now we can go there really. And once we are there, we can have a rebounds again back all the way to R1, especially if you're a midterm trader. But if you are just daily trader, here we advise to take profit also in time, and be careful because this is really fastly moving chart, so don't expire your position. And profit taking is advised here from 15 to 20%. Usually we advise, let's say 10 to 15, but because here it's very fastly moving, so it's between 15 to 20% profit taking is advised. And when you haven't really take it, it's a very strong advice. Press the sell button, take it, re-enter if needed, or check other opportunities. There are many at our channel and also elsewhere. But don't stay too long. If you stay too long, position expires and you will have losses. This is very important. Never try to become rich from one trade. Have your system of trade. If you don't have it, develop it. But just trying to become rich from one trade is just casino. It's not really a trading. So sorry to say this, but that's actually the truth. So with this being said, this is the first level still to buy in. And of course, technically it's still possible to decline, although really rare, but we still can see next, let's say, support level, which is just here. Also obvious from the price action of August, December. This will be between actually 247 and 286. A bit lower, well, strongly lower, of course, but if you also look the volatilities of this one, nothing is surprising in this sense. So this is really fastly moving chart, and the price change could be also very, very significant. So trading here also would require a lot of, let's say, mental strength, because you really need to understand and to know and believe in what's happening in your understanding of the situation, and holding it and buying through very carefully and calmly. So if this is going to happen, very rare, of course, still even technically the second channel, but if happens, then that would be the level to buy through. And again, not forgetting that this company was growing really enormously for last 1 year, and if there is any bad negative news coming, negative catalyst coming, it could cancel at least previous 2 waves. And this would be the first wave with this void as a first channel, and the second wave is the one that started by mid of July and beginning of July of previous year. Therefore, we just need to keep some funds to buy through there if the price declines, because we want to be really safe. It's a very low level. I know many people will have a criticism on that, but again, I want to again explain, this is not the level we say the price is going there, or it's not at all expected. But if negative news kicks in, it could go there. The price could be dropped there. And we know these examples on the market. You can find a lot that even in a one-day action, it declines. So what's the idea of this final support level? It's actually risk mitigation due to negative catalyst. So just keeping some funds to buy if there is any bad news kicking in, or anything bad, not only news, but also global market situation whatsoever kicking in. So while others will be taking losses, you will be just in time to buy and making your profit. And this will be then between 1 and 121. Really low, but if you keep some funds there, and if this is happening, kind of a doomsday scenario, you will still be able to exit with the profit. So this is the way to trade here. And again, whenever rebounds will take place, if you are a daily trader, 15-20% is your target advised If you are a midterm trader, let's say, you can of course wait a little bit longer to return at least to moving average 200 to make your final profit there. And again, how to buy through? This is an important question. For those who are not first, it's usually 5 portions traded, but here it will be a little bit different because the levels are quite low, especially the final levels, and the first ones are quite close to each other. So it would be advised to play here with 4 portions, meaning that the money you would like to play here, you can split in 4 portions, then you can buy with 1 portion in the first channel. If the price declines to the second channel, you can buy with 2 portions. And if any doomsday scenario is taking place, we are dropping that low, you just buy with remaining 2 portions, because this way it will be the best optimization of profit versus loss. And imagine, even if we go there, your average price will be somewhere at this very principal level, which is also a very strong one. And when the rebound takes place, you will just make enormous profit here. So this is really important. Always keep funds for average down. Never play with entire portfolio, at least according to our approach. Of course, there are different trading strategies, but our trading strategy is called developed by us, and well, it's of course not super new but known, but still we follow it. It's so-called mixed analysis, so we do 3 in 1. The first one is a classical technical analysis. Second one is looking and buying through the non-linearly buying through the support resist levels. And the third one, we always keep funds for risk mitigation due to negative catalysts, so the news. This way, whatever news comes, almost we are always safe. We don't care, we just buy through and you can take your profit. Of course, there are some, let's say, downward sides on this, let's say some, not really negativity, but the trade-offs for this strategy is that it might take a little bit longer time indeed. That's why we look always at daily charts, daily candles. It might take a little bit longer time, and our idea is we don't want to lose money, but we're okay to wait a little bit longer, because another way to trade is to put your stop losses. This just simply speaking, it means that you don't want to spend your time, but you want to spend your money instead. So there are 2 trade-offs. So if you say, I am a very good trader, I don't care on loss momentarily, but I'm sure I can make it back next day, then you do stop loss. But if you say, I still want to be more careful, more smooth entering and smooth exiting, still with making profit, less risky, then it's this way of trading. So you don't put stop losses, but you wait a little bit longer. So there are 2 ways. These are still both so-called daily tradings, but a little bit different approaches. So with this being said, that's all for universal security instruments. This is so-called trading card that you see here on the screen. You can print screen, screenshot it, and use it as a guide for trading with this position. And with this being said, thank you for watching this episode, and see you at another episodes at Stocks Advisor channel.